markets, there's this term when you're just walking around pacing up and down between two poles or 2 points. That's exactly what the market seems to be doing yesterday. You know, the higher end of the range closer to 25,200, lower end of the range, as soon as it goes towards 25,000, just does an about turn and then comes back. Right now, we're somewhere in the middle, 25,125, 80 points higher. Nothing really to worry about.
You know, Prateek of Kotak put it, is that it's liquid oxygen.
Liquid oxygen. Okay, you call it a liquid oxygen, but you know,
liquid aapko, you remember the
जीने नहीं देगा, oxygen आपको मरने नहीं देगा. The other way around. Figured that.
No, that's
anyway,
right.
Sorry.
That's the right rendition.
No, liquid won't let you die. Oxygen won't let you.
No, it's the other way.
Okay, whatever. The market is as confused as we are about this dialogue.
No, we're not confused. You got it right the first time. Anyway, I mean, I think we're up about, 25,130 is where we are at. And it's looking, I mean, pretty decent. But even yesterday when the market was down 70, just the number of single stocks which are moving up on volumes is quite heartening to see. So just a quick look at what's lined up here, right, over the next hour or so as we head into market closing. We'll, of course, talk about markets, firm trade, last hour, and Nifty comfortably perched above 25,100. Autos are trading with a flat to negative bias, but pharma and metal counters are leading the way. Regulatory pressures brewing for unlisted pharma player Hitiro. 6 observations from the US FDA. You know, shares of Loris are higher on the back of this, and we'll tell you why in just a bit. Vivek's story that comes up in a bit. TCS will report numbers shortly, and we've got interaction lined up at 5 p.m. So we'll get you what the street is penciling in. If there's a beat, what about margins, etc., etc. So that's going to be the other focus point. We'll also get you a story on Policy Bazaar, that is PB Fintech, which is going to be with Yash in a bit from now. But how should you position yourself in the last hour? That's the question. Mitesh is here to help us with that. Mitesh, what do you say?
Good afternoon, Prashant. So, you know, I was highlighting the fact that as long as we manage to hold 25,000, I think declines will be chances to possibly buy. And yesterday we had a low of 25,022, and today I think it's 25,024, so practically the same low. And also is the fact that a couple of days ago we had highs of around 25,220, and today also, you know, I think we're just kind of close to that. 25,180 was the high today, 182. So I think broadly it's a market which is good. The structure is positive. I think getting past 25,220, 250 should add more strength, and we could then possibly look at 25,400, 450 zones. But I think there's no extra burst of momentum. So you won't get those big moves which were visible a couple of weeks back. So the idea should be to trade more on the long side with stock-specific bias, or on the index if you want to trade. You know, declines like we had yesterday and today are the chances to buy, where you have at least favorable entry point and a good risk-reward equation. For the timing, I have 2 software names on the buying side. Tata Alexa is a buy with a stop at 54.89 or just below 54.90 and a target of 56.75. And Wipro is a buy with a stop at 241.90 for targets of 255.
Right. You know, Mitesh, just one question on the market breadth, because over the last 2 trading sessions, the breadth was more in favor of declines. And today, at an index level, the mid-cap index is doing a lot better. We do have, you know, the Nifty just about 0.4% higher. The mid-cap index is up 0.8%, taken high by a lot of other individual names like you were pointing out. But if you look at the broader market, the breadth is still split right down the middle. Those crisscross lines come up on the screen. They've been stuck to each other for the last 3 hours, 3.5 hours or so, with as many stocks declining as advancing. What would you make of that?
You know, again, the breadth is something, you know, which typically I don't give much of weightage to, given the fact that it's still about 50 index, so 50 stocks which make up the index. But broadly, if you have a very positive breadth, that's a good sign and signals more participation. But as I said, I think this is not a market which is giving you that burst of energy. So maybe it will be quiet and slightly, you know, subdued kind of movement.
Right. A range is what you are expecting as well, though metals are doing extremely well this afternoon. JSW Steel has moved higher. The metals index actually comes up for you, has been trading fairly well and is at the high point of trade as well. But On derivatives trading, we have SEBI sources saying that consultation paper is taking time due to the consultative and inclusive approach. Many in the financial markets earn their income through derivatives trading. Regulatory decisions must consider impact on individuals' incomes and livelihoods. Speculation and derivatives, integral and legitimate components of financial markets, are not inherently negative, as a result of which the SEBI is exploring multiple steps to protect retail investors from potential losses. So we do have, this very interesting space that we're in, Prashant, right now, because on the one hand, yes, it contributes to a large part of the volumes, and in turn, as a result of which, revenue and income for a lot of the participants of the market. But on the other, there is this fear that a lot of people are losing money on this as well. So there'll be a very interesting regulatory, stand that would come from this.
Yeah. No, Mangalam, the sharp takeaway from this is that there seems to be a change in the thought process at SEBI. I mean, that's what
Makes
it
sense.
suggests. Just think about when, we had the earlier chairperson.
Makes sense.
I mean, those reports about how many people are losing money, it was very clear. I mean, actually, till recently, that, the idea is, and by the way, we have the SEBI chairperson on record, on camera, saying that we want to introduce this consultation paper, focus on longer tenure derivatives, so the idea was move away from these weekly. By the way, this is all related to the weekly options debate, right?
Yep.
And now with, it's not, obviously, it's difficult to say what exactly there will be a consultation paper.
Right.
But two things. One, it's not happening now. It may be delayed.
Yep.
And, the story, all source space essentially saying it's because they want to be inclusive, consultative, and look at the other side also, which is people who are actually dependent on this. So, I mean, my sort of takeaway, and Yash report got the story, and probably we get him on the phone line as well, that there seems to be a change in, thought process, thinking, etc., which is then, in a way, positive for the intermediaries, which is brokers and exchanges. BSE, I think, is up about 3.5%. Angel, many others actually in the system.
We're seeing all of that. Will be very, very interesting to see how this change in stance, so to say, or at least the approach plays out in terms of regulation and what comes off it. But we do have Dharmesh Kant of Chola Securities joining us now for his view on the markets. Dharmesh, we're in a bit of a range right now ahead of, Diwali, the festivities, result season, most importantly. What are you penciling in this time? From a business standpoint, do you think that maybe the second quarter is a washout and the street will look beyond that and look at the positive triggers that we have third quarter onwards?
Yeah, good afternoon, Mangalam. I think second quarter would be a tad better than what the expectation was earlier. I mean, couple of months back, it was expectation of 5-6% kind of EPS growth on the Nifty 50 companies. But now I think with, last 10 days being much better than what it would have usually been. So I think it can be around 7% kind of an EPS growth. The biggest problem is second quarter is not a problem. The problem will come with the third and fourth quarter, where even the base effect was high last year. And this time around, since bulk of the heavy lifting has been done earlier in the second quarter itself, because Navratri fell in the month of September. Last year, Navratri and Diwali was both in the month of October. I do think third quarter will be a challenge. So, proof of pudding will come only in the month of November. So, market will be sluggish. It will be range bound. It will hang around where it is right now, 100, 200 points plus minus. And then after Diwali, I personally see some, profit taking and selling in the market coming into play.
That exchange weekly option story that we were discussing, Dharmesh, good afternoon.
Yeah.
Any thoughts on if there is a change in thinking and it materializes into what is then finally decided on this weekly options bit, which has been such a big revenue generator and a volume generator for everyone, what do you think? Stocks at play?
Yeah, good afternoon, Prashant. I think there are three parts to it. One is the government or the regulators on the fiduciary capacity. Other are the intermediaries where we also belong. And the third is the client level. So my thought is that direction has not changed. Stance has also not changed. It's just that delaying the pain. So subsequently, how SEBI's proceeding is earlier it could have been done in a 15 days or 1 month kind of a time frame. Suddenly a notice comes and everything is stopped. Now I think they are willing to go by time, 6 months, 7 months, 1 year they want to give, and see whether investor education is good enough to take care of clients on the trading part. Earlier it happened all of a sudden post-COVID, and people did not realize that markets can be harsher at times, and then the losses were there. So if we as an intermediaries are able to convince the government to show that on the in the black and white as far as clients are concerned, that investor education is helping them to tackle this market in the right way, then there may be a change in stance. Otherwise, I don't think so. It's more of a time buying tactics and giving time to all parties to get this more in a sorted way. But nonetheless, this will definitely be negative for direct brokers who are into trading and investing activities, facilitating their clients. For them, it is not that good. But infra players, I mean SDS, CDSL, exchanges will continue to have a long-term investment bet in place.
Right. You call this a time buying activity. So do you think that till such time that time is being bought, these stocks will continue to do well? Because, if the regulation were to come today, there will be earnings loss from today. If the regulation is not coming today and it comes, say, in whatever form, it comes, say, a few months later, a few years later, then till then, there is that potential of increased incremental earnings.
Definitely, sure, Maglab. I think more the time is given, more the measures will be less harsher. And if, as we have been thinking that, I mean, retail clients will realize more prudent way of trading rather than just going berserk on few tips and here and there. So their education itself will take care of the damage which has been done. Then definitely this, I mean, incremental revenue earnings will be in place. We have seen this. I mean, the last month gone by, the numbers were far better than what it was. One was the market was better, but at the same time, the numbers also started tickling in quite well. So from that perspective, I mean, direct plays like, Motilal Oswal and the companies of the likes will benefit on the stock price action. Angel One is one of them. But still, my suggestion would be to create a basket of AMCs, infra players, the broker. Maybe AMCs can go with 40% kind of players, like 30%, and back percent to the brokers and play this market by creating a basket rather than going on individual stock tips.
No, point taken. There's another big story, right? And this is a CNBC-TV18 exclusive. There's a huge US FDA shadow over Hetero Labs. It's unlisted, but it's a very large company, private company. US FDA has issued 6 observations to this company, but there are implications for listed entities as well. Names like Loris, Divi's, and maybe one or two more. Vivek is going to tell us what the story is about, and of course, where does this go from here? Vivek.
Well, that's right. Hetero Labs is quite a large player, especially as far as the API market is concerned, and especially large player as far as the ARV market is concerned. So the US FDA inspected the company's Unit 9, popularly known as the Nakapalli facility in Andhra Pradesh, and the inspection was conducted between September 19 to September 26th, and the US FDA then issued a 14-page Form 483 with 6 serious observations to the facility. We'll quickly run through the important observations. The first observation in the Form 483 implies that the quality control unit procedures were not fully followed. And the most important statement over here is that the US FDA says that there was an unregistered testing laboratory that was located outside the official facility of the company. Along with that, they say that finished APIs intended for the US market were released to off-site API warehouse without documentation. A few procedural observations are there, number 3, 4, and 5. But if you look at the 6th observation, there's again an observation stating that there was failure to document out of specification results obtained from this particular unregistered facility. So these appear to be quite serious in nature. We spoke to quite a few experts and they believe that there are possibilities that there could be a certain escalation as far as this particular Form 483 is concerned. Now, as far as the implication for listed entities are concerned, Hetero is the number 2 player, especially when it comes to the ARV product list, and some of the companies that could benefit in case supplies are disrupted from this particular facilities include names like Loris Labs, remember, quite a large player as far as the HIV ARV market is concerned, Loris Labs as well as Aurobindo Pharma. In fact, Nuama says that Aurobindo Pharma and Loris could benefit in case there is an escalation from this particular site of Hetero. It's a large facility and one of the largest actually as far as the API manufacturing is concerned.
Yeah, so the common, I think Hetero is, Vivek, one of the largest, as you said, antiretroviral makers, right, for HIV, etc. And Loris is also, so that's a big one where there is overlap. And that's it. And just one thing, Vivek, if you can You said there was an additional facility where this unsupervised facility where products were being tested. Is that what they're saying? This seems pretty serious.
That's right. So that is something that we spoke to a whole host of experts. As far as this is part of observation 1. So what it says is that there was an unregistered testing laboratory. So, this is something that appears to be quite serious, and it does appear to be, as per the tone of the Form 483, it appears as though the US FDA actually knew about the existence of this particular facility, even prior to inspecting. So there appears to have been some doubts before they came to inspect this particular facility, and that is, in fact, the first statement they've mentioned as part of observation 1. And, it'll be important to see how the company responds to the Form 483, and post that, what is the kind of action that US FDA takes.
Yeah. Vivek, thank you very much for that. Dharmesh, any thoughts on Loris?
Now, first, these observations are quite serious, Prashant. I mean, this is amazing to know that such kind of a facility, was there. I mean, if the beneficiaries can be Loris, Aurobindo, and others who are into the same segment and into API intermediaries, Loris has moved quite a lot. I mean, if you see the price traction, it has been too strong a price traction. Valuation multiples are way beyond the reach to be justified. And I do understand that CDMO business has picked up. The management has guided for a better margin going forward from 24 to 28, 29%. And they've also got a land facility where they have serious plans of investing more than 5,000 odd crores, and corresponding benefits will fall to them. But to my mind, given the news which has been circulating that there won't be any tariffs on generic products which are imported into US, there I think Aurobindo Pharma stands a better chance, and the valuations are quite attractive at this point of time. Q1 was not that good, but I think going forward for Q2, the things are likely to pick up for Aurobindo Pharma. So that's a better play to bet on, and maybe a Lupin. So where the Q1 was excellent set of numbers, and it's likely to continue with those set of numbers. So two top pharma pick from our side is Aurobindo and Lupin.
All right, Aurobindo and Lupin. Aurobindo actually doing quite well in today's trading session. We'll come back to you in just a bit, Dharmesh, to talk more stocks. As of now, let's get a big exclusive that we're tracking. Sources close to the Tata Group tell CNBC-TV18 that all trustees are confident that the deliberation of the last few days will lead to a harmonious working relationship. Let's bring in Parikshit, who is getting us details on that one. Parikshit, there were a few days of instability, some fear, but now it seems like things are well on track. And what a day for them to be on track, or look like be on track.
Ahead of Tata Trust board meeting on October 10, sources close to Tata Group are hoping that differences between the trustees will be ironed out. Sources familiar with the matter say that all trustees of the Tata Group have had some time to reflect over the developments of the past few days. They told CNBC-TV18 that they are confident that deliberations of the last few weeks will lead to some sort of harmonious working among Tata trustees and Tata Sons board members. We also learned that contrary to some reports, there was no difference among trustees on the appointment of Noel Tata as chairman of Tata Trusts. Noel Tata was in fact appointed as chairman of Tata Trusts unanimously. All Tata trustees unanimously believe that Tata Sons should remain a private entity, even as the RBI had mandated a public listing of Tata Sons by September this year. Sources saying that the government was obviously concerned about differences among trustees and therefore held a meeting with members of Tata Trust and Tata Sons on Tuesday. Apart from differences over the appointment of independent directors, including Anita George, Tata Group trustees were divided over the resignation of Vijay Singh, the former defense secretary, as nominee director on the Tata Sons board, and also the manner in which he was almost led to taking a decision on resigning. While the appointment of nominee directors above 75 years of age is reviewed annually, some believe there was no provocation or reason for Singh to leave the Tata Sons board, considering his immense contribution. We have been told that Tata Trust board meeting tomorrow will only look at routine matters, including disbursement of funds for charitable purposes, including a hospital, and none of the contentious issues and differences that have played out over the last few weeks will be taken up in this meeting.
All right. Thanks a lot for that, Parikshit. So, obviously, sounds better than what it was over the last few trading sessions. Just watch out for CAMS. The company has given an update on the exchanges saying that UPI Offline Plus has been designed for... they've launched a payment aggregator business, CAMS Pay UPI Offline Plus, which will obviously help on UPI payments, etc., on an offline basis. So that's a positive as against regular UPI payments, which you have to do it only if you're connected to the data. So offline payments would be good. The stock at the high point of trade. But Dharmesh, today the metal space is doing extremely well. Do you think that maybe we're in for a bit of a cyclical up move on the metal space?
Yeah, definitely, yes, Bangla. I mean, they have been doing pretty well, and most of them are at all-time highs. But we do expect this momentum to continue for the balance of FY26, that is second half, because activities have been picking up quite well in the domestic front, and Government of India has safeguarded domestic metal companies as well from dumping of steel and other ferrous products. So I think both non-ferrous as well as ferrous is likely to do well. Copper prices are already running quite high. And if you are playing a Vedanta Group, so Hindustan Zinc, then silver prices are quite high. Though the numbers reported for the last month was not that high because of the productions were not to that extent. But I think they are likely to catch up. So in the entire metal space, the top three pick which we have been focusing on, one is the Hindustan Zinc because of its silver and lead play. At the same time, we are focusing on Hindalco for copper, aluminum, and other metal plays into it. And the third is the JSW Steel, purely from the domestic consumption point of view. So all these three, though expensive on a 10-year map, if you look at, they are almost nearing the +1 standard deviation kind of a P multiple. But extension of the same is likely to be there in place going forward into the rest of the year. So 10-15% kind of an upside from here till March is likely on the cards.
MCX, we were talking about BSE, etc. MCX is up 6%. MCX, I think, also offers weekly options. I'm not sure if this is the same reason or there's something else.
I think the reason for MCX is that there's a fair amount of trading activity on gold and silver, given the sort of prices, etc. So, and this one's the only one which has, access to commodities as against the other ones right now, with the kind of liquidity, etc., which is available. So I think the street is playing.
Why today?
Why today? Well, that's anyone's guess. That's the market that we're in.
I don't know. I mean, but I just figured that they also offer weekly contracts. Or I don't know if there's also that added reason. You're absolutely right. I mean, silver, gold, absolutely berserk price movement. The other one is Black Buck, which is Zinca Logistics. I mean, that's the company which is trying to organize trucking. It'll come up on your screen. 8.5%, 675 is where that is now trading at. 30 seconds. I don't know if you have any thoughts on MCX or Black Buck, Dharmesh.
MCX, Prashant, what is happening these days is people are hungry for any good news. So any trickle of any better news is there. A lot of liquidity is there in the system, and because of illiquidity of the stocks, the prices go up quite rapidly. But the other stock I have not tracked actively, so won't be able to comment. Apologies for that.
Speak about good news, there's none better than what GM Breweries has to offer ahead of the festive season. Because remember, this time around, we had the added disadvantage for the larger players in the form of Maharashtra liquor policy. And in GM Breweries, which has most of its sales and production in Maharashtra, they benefit from the Maharashtra made liquor policy. And as a result of which, they reported their second quarter numbers. I was just looking at the profitability. 21 crores is turned into 35 crores. So there's a big near 70-80% jump out there. And entirely all of that is led by revenue as well as operational profit. So all these factors working for them, stock up 18%.
They do bulk alcohol or branded
They do branded alcohol. They do a lot of country liquor. So GM is, I wouldn't know the actual name, etc. But Narangi is one of them that they sell in all of Maharashtra.
I'd be worried if you know the names.
I'd be worried if you consumed it.
Okay, 18%, 900. That's a big mover and very large volumes as well, by the way, as we speak. Talking of names which are going up, there's one name which is going down, but it's kind of sort of retracing an astonishing rise. NetWeb, if you can pull that up. NetWeb is down almost 8%. I'm not sure the last time the stock was down this much. I don't think there's any news flow, maybe except the global news, right? Which is that, NVIDIA, OpenAI tying up with AMD as well. AMD is a competitor, a much smaller competitor to NVIDIA. And NetWeb, of course, gets its GPUs from NVIDIA. So 4023 coming off very sharply. Take a quick commercial break. Dharmesh, thank you very much for joining us. We're back with Mithun Avast of Kiva Advisors on the other side.
Well, the market's picking pace now, 120 points for the Nifty. A couple of stocks doing well. We have Balaji Telly, which is now spiked in just the last few minutes. Schloss, which is the Leela Hotels, also off lows, was in the red for a bit and thereafter has moved to the high point of trade as well. But we've been talking about the Tata Group. Hormaz is standing by. He has, with us, the spotlight on the top movers in the market. Hormaz, tell us more about the ones which are buzzing in the last hour of trade.
Putting the spotlight on the Tata Group stocks after a year after Ratan Tata's demise. And it's not been the best of the last 12 months for the Tata Group, particularly for a lot of its larger leaders. Now, from 33 lakh crore as of the 10th of October of last year, the current market cap of the Tata Group stands at around 26 lakh crore. And that's a downtick of around 7 lakh crore gone in the last 12 months. Is led mainly by TCS, and TCS being the largest company of the group, the largest IT services company, 4 lakh crore worth of market cap gone in the last 12 months for TCS, and it's been struggling with issues of its own. The stock fell to a 52-week low as early as the 1st of October. The worst performing stock on the Nifty IT index from when the index had made its peak in December of last year. The stock is down around 30% from those levels. Tata Motors as well is down 30% in the last 12 months. That stock too has lost well over 1 lakh crore in market capitalization as well, and it's struggling with issues of its own, right, facing JLR related issues and so on. And that is why, even because of the GST reforms, the stock did not do well even during those times. Now, a lot of the other Tata Group names that have struggled over the last 12 months, Trent is one of them. Recent entrant in the Nifty 50 index, down 43%. Incidentally, it is in October of last year that the stock had made its record high in excess of 8,300, among the worst performers on the Nifty so far this year. And it continues to struggle with slowing growth in comparison to the guidance given by the company early on. So Trent, of course, being one of the underperformers. Tata Technologies as well, down 32% now in the last 12 months. That too has lost around about 14,000 crore in market cap. And from its post-listing high, the stock has almost halved and also continues to struggle with some key issues faced with some of its top clients as well. Some of the other underperformers in the Tata Group, look at Tata Elxsi down 23, Voltas down 20, Tejas Networks, Tatacom, Nelco, all of them declining anywhere between 20 to 30% in the last 12 months. But there were some names that stood out. Look at Titan, and it hasn't done much, but it hasn't declined in comparison to its other large Tata Group stocks as well. Tata Investment, of course, has been on a tear in the recent past, but despite the correction that it has seen recently, is still up 38% in the last 12 months. And Indian Hotels being the other one, Banaras Hotels being another outperformer, and Tata Consumer has remained largely flat over the last 12 months. So Tata Group stocks have not had the best of times in the last 12 months, led mainly by TCS, but there are certain ones that have stood the test of time as well.
Absolutely. Hormuz, thank you very much. Good wrap up of how the group has fared over the last 1 year. Mithun Aswath is with us. Mithun, great to have you back on the program. It's been a while, I reckon. I want to just start with a quick word on the IT services pack. TCS will report in an hour and a half or so, and we'll have the opportunity to sit down with the management. Do you think it'll do anything for, for itself and for the industry? And do you see, if you look at expectations, Infy is supposed to do better. There is buzz of a large order. HCL Tech perhaps also a little better. Coforge, I guess the management has been on record saying, well, they do, 5-6% kind of CC growth. What else? What's your sense on this pack, and if investors even tactically make money from here?
Yeah, good afternoon, Prashant. I think on the IT space, obviously we've seen, negative news flows in terms of one on the H-1B visa front, plus the whole impact on AI, what it will have on the IT services space. I think having said that, if you look at valuations, I think most of the large cap IT names now trade at a 3-4% sort of a dividend yield. So they're coming to the value end of the zone. So I think they could provide potentially double-digit returns from here. And in the current quarter and the subsequent quarter also, I think, there have not been too much of wage hikes. So the margins could surprise on the upside. I think the main issue has been growth, and that is something that one will need to keep an eye on. But if you look at valuations, I don't think the downside is too much from these levels.
All right, the downside is not too much from these levels. Mithun, thank you for joining in. The consumption themes, what do you have to speak on that? Because, on the one hand, staples are calling it a bit of a lost quarter because of the transition and, everything is now moved towards the third quarter and the second half of the third quarter in particular. Do you think that the street will disregard the current disappointment in earnings and perhaps start building positions for the future, near future? Or do you think they will, stay away until there is actual growth that they see?
Yeah, I think, Mangalam, if you see the consumer space on the staple side, obviously valuations are high, but there has been very tepid growth. But I think in the third and fourth quarter, you will see acceleration in terms of growth. And that could obviously provide upside to a number of these stocks because of those GST cuts that we saw. I actually also see that the consumer discretionary space is something where, the upside could be higher in terms of growth. You've already seen a glimpse of that in the September auto numbers. I think the October numbers also will be quite strong since, it's the festival season. So I think the Q3 numbers is something that you will people will anticipate, and the auto sector, other discretionary pockets as well, in terms of consumer durables as well, should bounce back quite well in Q3.
Right. And what about in the discretionary itself? We saw, the jewelry space. Very interesting trends out there. Gold is at a record high. Titans reported a 19% growth. On the other hand, Senco's reported just a 6.5% growth. We spoke with both Joss Salukas and, Malabar this morning. Joss says that volumes were down 20%. Malabar is saying that, people are panic buying because they think that prices will shoot up further from here on as well. Things are being pulled in every direction. What do you think of the jewelry space?
I think, Mangalam, on the jewelry space, obviously with the prices being so high, the volume growth is unlikely to be there. So it's going to be quite anemic. And we are going to see, obviously, revenue growth primarily led by value growth. So I think that space, we need some sort of stabilization or cooling off of gold prices for demand to come back in a sustainable manner.
Yeah. No, got that. Mithun, stay with us. I think we just want to take a small detour, but very much staying with the markets, right? Take a break. We're back with Mithun. We'll also get you D-Street Chatter. We'll get you our trading calls as well. Coming right back. Okay, welcome back. Markets, of course, up 150 points. So if anything, things have picked up a little bit. Remember, we started an hour, almost about 45 minutes back, actually, with about a 60, 70 odd point pop that has become bigger. Nimish is now standing by with what he's picking up from dealing rooms and what's the chatter like. Nimish, afternoon.
Hi, Prashant. Afternoon. So, to me, it looks like a powerful short covering rally. You know, if you look at the top 7, 8, or 10 F&O stocks, there seems to be a bit of an short covering element in all the movers today. For example, like one of those a lot of the metal names and all are buzzing in trade, but no specific reason. It looks like more of a short covering rally. There is a bit of buying as well from domestic mutual funds. So maybe that the DI number may look a bit sizable today. Is the overall feedback. From sector perspective, pharma is doing good today. Of course, there is a bit of a relief rally and a short covering rally as well in anticipation of some relief for the Indian pharma companies. So that's buzzing. And also metal, as I said, there is a bit of buying as well, but a bit of short covering element as well in that particular space. So, large part of this rally, Prashant, looks to me like a short covering pullback. 50 to, on a technical level, 25,200 is the next level to watch out for. If that gets taken on the upside, you will potentially see further short covering rally. And remember, the FIs are still net short, almost 93%. So there is that cushion of FI short covering which can further happen. But today's large part of the rally seems to be aggressive short covering in most of those F&O names.
Okay, aggressive short covering is the feedback behind this move. In terms of individual names, Nimish, what's on your list today?
Well, a lot of stocks are buzzing. In fact, the broader market also seems to be participating in today's rally. Couple of stocks which stands out for me today: SpiceJet and Dynamic Technologies. Both are buzzing after potential clean-out trades. In SpiceJet, I understand one of the leading wealth fund was a seller, and they've completely sold out today. And hence, you're seeing a big move of 15%. Even in Dynamic Technologies, it was part of my list a couple of days back as well. PE was a seller there. Looks like that's cleaned out today. And in Dynamics, I understand one domestic mutual fund was a buyer in today's block. So disclosures could be quite interesting in that stock as well. Even that is buzzing up 13%. Inox Mini is the other stock on my list. Again, up 5% in today's market. A bit of short covering element to it as well. But I also understand one of the domestic PMS has been active buyer in Inox Mini of late. The third, a couple of real estate names which are not buzzing, so to speak, but there is some signs of delivery-based buying happening now. Soloda and Godrej Properties. Not big moves like what we saw in Prestige, but at least there is some signs of delivery-based buying happening now there. And the last one is Adani Power. Again, buzzing on back of very high volumes. Even there, I understand there was a block trade and a domestic mutual fund was a buyer in that block. So that's the reason why even Adani Power is up 3% in today's market.
Interesting list. As always, Nimish, thank you very much for that. So that's D Street chatter. How's the F&O sort of part of things looking? Nimish was telling us that perhaps there is short covering. That's the feedback that he's getting. Is it showing up in data? Mangalam has walked across to the F&O desk to tell us exactly that. Mangalam, over to you.
Yes, there are signs of that short covering, but until the range is broken for the Nifty, which is between 24,950 at the lower level to around 25,200 at the upper level, 25,950 rather, and 25,200 at the upper level, we won't see a massive short covering. Right now, it's just, the range-bound trade that we're seeing. But there are individual pockets where we are seeing a fair amount of short covering. The Nifty is being powered ahead by both of its engines, the Nifty Bank as well as the Nifty IT. But look at the outperformers. We have the pharmaceutical space and the metal space. That's where we are seeing a powerful amount of short covering. And that's witnessed in the buzzing stocks as well. Oro Pharma, Granules, Strides, all of them doing well. Even in the metals pack, you have Hind Copper, NMDC, Tata Steel, all of them fairly well bid in today's trading session. What this up move has done is it's given a lot of support to the bulls to go ahead and write puts. So 25,100 and 25,200 puts. All of them have seen a fair amount of writing, telling you that around 24,950 to 25,100 is where there is strong support. The 25,200 call writers, they're still active in today's trading session. 25,200 call comes up for you on the screen. A couple of crore shares in open interest out there. There has been signs of short covering as the markets moved once again towards the high point of trade. And we've held on to the lows for the last 3 trading sessions. So if you look at it, the Nifty low yesterday was around 25,000. Today's low, 25,024, pretty much in line with the 20-day moving average. Now today's high has been crossed past the 25,182 mark just from a few minutes ago. Now the important part is it should cost October 7's high of 25,221 for further short covering. A lot of long positions added on these exchange-related names. We were talking about BSE, MCX earlier in the show, that these pockets have seen big long build-up. Inox Wind has seen a lot of short covering, and we have seen in this market as well a couple of shorts being added on a few names. Uno Minda and InfoEdge stand out in particular. So by and large for the Nifty, a big short covering move only after it crosses 25,200, but individual sectors like pharma, IT, all of them seeing some signs of early short covering.
All right, thanks very much, Mangalam, for that. That's the F&O side of things as they stand right now. Mitesh, from the last time we spoke, at least 60 points on the Nifty. What's the sense, Mitesh, on your trades?
I think, there was always this chance of this bounce back getting us to 25, to 20, to 15 zones. And we're practically there now. And that's an area where I would suggest if there are people with index long positions, at least take 2/3 of the position off the table, book some profits, and see if we can get past 25 to 50. I still don't have a signal on that. But on the stock side, CG Power is something, which has come on my radar. I think that's a stock which is showing good traction as we end the day. So BTST here, keep a stop at about levels of 753 and a target of 775, possibly can be looked at. And the other one is BTS of Tata Steel with a stop at 175, just below it, target of 178.
Is there a trade in TCS, Mitesh? We should put the expectations out along as well, but go on.
TCS, I think, was already on the buying list earlier. I think, we had buys on Infosys, Wipro and LTIM as well. TCS, I think, was yesterday, but still looks good to me. I am looking at a target from 3120 to about 3140. Beyond that, even 3180 is possible. And once these levels are cleared, then I think we can look at a much bigger reversal.
Okay, all right, Mitesh, thank you very much for that. We'll be speaking with the TCS management, and that's going to come up a little later in the day. So you'll hear from the MD and CEO, the Chief Operating Officer, the CFO, and of course, this new CHRO at TCS as well. So don't miss the TCS results deep dive. The play out tomorrow morning at 8:35 a.m. right here on CNBC TV18. Take a break. We're back. And Ambrish Baliga is going to be with us in just a bit.
Welcome back. A bunch of stocks doing well in the broader markets right now. We do have, Zinka Logistics, as Prashant pointed out, up around 8%. Latravenues Tech, Exigo up around 6%. A lot of these graphite names also spiking right now. And Solar Industries is the other one, which from the lows has seen a spike and currently at the high point. The Nifty still, hasn't touched that 25,200 mark. Tries to move to the higher end of that range and sees a bit of a supply out there today as well. No different from there. So today's high, perhaps yesterday's high, pretty much close to that 25,200 mark. Market expert Ambrish Baliga with us. Ambrish, the mid-cap index on fire today. In fact, we've seen, the red and green lines now move a little with the movement towards the green one. 1,500 stocks as against 1,300 stocks, which are declining. 1,500 are gaining. So they were stuck. Now it's moved a little. What's the stock that you would have on your radar, given the sort of environment that we're in right now?
I see the stock which I have is PI Industries. It's a leading agrochem company, also a pharma player now in biologics and CRDMO. Focused on R&D with about 700 scientists working on about 70 projects. They have about 210 patents, 15 molecules were in fact commercialized in the last 3 years. 90 plus molecules are in fact in the pipeline. And domestic agri brands are quite popular and have an extremely good reach, about 15,000 distributors, more than 1 lakh retail touchpoints. The Q1 earnings were a bit muted. Q2 is also expected to be slightly better than what Q1 was, but I think the main story would start from the second half of FY26, when we should see a decent growth. Next 3 years, revenue CAGR expected is about 10%, PAT CAGR about 11%, EBITDA margin of about 28%. Based on this, my EPS expectation for FY27 is about 140. And with this, my price target is 4,480.
That's interesting. PI Industries. Ambrish, hi, afternoon. Any thoughts on the recently listed jeweler, Bluestone?
No, in fact, I didn't track that, so a bit difficult for me to really comment on that.
That's kind of the pace at which new issuances are coming is kind of hard to track, isn't it?
Exactly.
LG Electronics IPO ends today, closes for subscription. Did you take a look at it? Asking for some 77,000 crores in market cap.
No, that's true. Because clearly...
Big response so far. Yeah, sorry, go on.
The response has been extremely good. But then whatever issues I think were pointed out, this morning about the contingent liabilities, I think that is something to be a bit worried about. But as of now, I think the listing, at least the opening should be decent. So I would say that those who possibly get allotment should think of booking out on the opening.
All right, that'll be very interesting because, they've left value on the table at 35 times as compared to the others which are trading at 45, 50 times. So not an absolute term, but definitely a relative term. On Bluestone, what was very interesting, Prashant, was that Bluestone decided to IPO after they saw the success of CaratLane. So Titan obviously bought CaratLane at a low valuation, grew that business, and then, gave the money to Mithun Sacheti to buy CaratLane and grew CaratLane into what it was. Everyone said, okay, Bluestone, when they had PE investors, etc., they said there is value to be unlocked out here. That happened. The IPO happened. Bluestone's been doing extremely well. And recently, we got a note from one of the brokers who was now valuing Titan once again, given Bluestone's success, and saying that, okay, if Bluestone has succeeded so much, let's add an SOTP to CaratLane once again. So it was a very nice Excel way of, circular referencing, so to say. So that's about Bluestone. And the current environment, high gold prices, Bluestone, CaratLane, and even Kalyan Scandier, all of their positioning is very affordable.
Is Bluestone mostly sort of gold, or is it like stones,
It's
etc.?
affordable jewelry. So they will have precious, semi-precious, lab-grown, etc. as well. They would have diamonds. They would have some gold, but they'll be lower caratage. It's not necessarily Tanishq, Zoya, or Maya. It's more of
And I think,
the affordable daily wear sort of things.
Yeah, absolutely. Some visuals coming in right now. That's UK Prime Minister Starmer with Indian business leaders. And that's coming in live right now. And next to him is Prime Minister Narendra Modi meeting business leaders. This is happening in BKC here in Mumbai, at the Global Fintechs Fest. So those are visuals. It's a pretty packed sort of lineup of CEOs, room full of top industrialists and CEOs. I think Prime Minister Starmer, of course, has talked about the importance of India-UK sort of partnership. This is, by the way, their third meeting since Prime Minister Starmer took over in 2024. 2 were outside India, and this is the first one here in India. And, that's a delegation of leaders from UK and, of course, their counterparts here in India as well. So that's essentially what's going on at this point in time. Another news flash at the bottom of the screen. Israel Deputy Foreign Minister says that the Gaza ceasefire is in effect. I think the is missing. So we'll put that out. But that's of course, has been spoken about earlier as well. We have Ambrish with us. Ambrish, are there any thoughts on, do you track Ixigo?
Yeah, in fact, I've been bullish on that space. Clearly looking at the way travel tourism has been booming. So that's one stock to be kept in the portfolio, at least from a medium to longer term perspective. Possibly we could see levels of about 380 to 400.
Tomorrow they have a board meeting to issue of new shares, and they disclose that they've got interest from a potential investor who wants to buy up to 16%.
Right.
So I think the mystery will be solved tomorrow, as and when that happens. NetWeb is down 10%. My God, huge! It's the number one volume-led loser now. 39.50 on NetWeb coming through. I'm told there is an Equirus note in which, basically they're saying, well, maybe earnings growth, revenue growth for the second quarter is going to be a little underwhelming. 15-20% kind of growth rate is what Equirus is suggesting, and I guess there is some profit booking here. Because there are profits to be booked, it's had a one-way rocket-like move, which is coming through. Another one is E2E Networks, again in that same sort of, AI data center-led move, 7% cut there as well, which is E2E. Any thoughts, Ambrish, these two names?
In fact, this one I don't really track very closely, but I would just like to point out something on the gems and jewelry space, which you're just talking about.
Yeah.
My view out there is that looking at the way the gold prices are going, most of them may show decent profits because of inventory gains. But then at the ground level, if you talk to most of these jewelers, they are in fact talking about the volumes going down. So I think that is something to be disturbed about. And going ahead, in case we see some sort of a correction in gold, because we've never seen this sort of a move in such a short time. I think, at least if you look at the last 60, 70 years history of gold, we have not seen this sort of a movement. And in case there's a correction post that, and what we have seen in the past also, whenever there have been corrections, they've been there for a long time, and we have seen lull for a long time. So from that point of view, I would be a bit careful as far as investing into the jewelry space at this point of time.
Take that point, Ambrish. Thank you so much for that. We'll take a short break, come back. After that, we'll have, a conversation continuing with Ambrish on markets forward. But between that, we have the market close right now. 121 points higher on the Nifty, moved towards the higher end of the range at around 25,200 at one point in time. But the start of the show definitely was the mid-cap end of things. The mid-cap index was up around 1%. Towards the end, the advance decline ratio also moved in favor of advances, breaking a two-day streak of the decliners moving ahead of the advances. In terms of sectors, the big gainers were obviously the pharmaceutical and the metal names. The pharmaceutical names, obviously, on account of a couple of factors. One, relief coming in, a notional relief at least, that there would be no additional tariffs on generics from the US. And secondly, potential benefits coming in from, the troubles, the regulatory troubles at Hetero for some of the animal pharmaceutical makers. Metals, Tata Steel, JSW Steel, top Nifty gainers. We also saw some traction in SBI Life. IT stocks were fairly well bid ahead of TCS's numbers, so we'll monitor what TCS's management has to say about the way forward. That'll be more important than just the reported numbers. On the way down, some profit taking for Titan, and the mid-cap end of things as well. We saw some profit taking in a couple of these names. But all the movers and shakers and the market for tomorrow will be discussed after this short break on CNBC-TV18's Market Forward.